Good afternoon, everyone. My name is Dee Ryan, and on behalf of the team at Limerick Chamber, I'd like to welcome you to today's session on financial supports during COVID-19 and managing cash flow. Today, we've partnered with our SME business partner, AIB, and we're delighted to have Damien Geraghty, AIB Business Banking Head for Clare and Limerick, with us. Before I hand over to Damien, I'd just like to let you know, if you are not already aware, the government has introduced a Restart Business Grant, which became open for applications just last Friday. And following the session today, we will circulate to you the link to where you go to apply for that Restart Business Grant on the local authority website. It's a grant that is up to a maximum, most businesses will be eligible for it, but there's a Q&A section on the website that will allow you to assess that yourself. A very simple one-page form that you fill out to apply for it, and the intention is to distribute funds directly into businesses to aim to assist with you reopening and managing your liquidity through this difficult period of restricted trading. So before I hand over to Damien, I'd like to thank him and to my own event manager, Queen Maloney, for the preparation and the work that they've put in for this session today. I know it's going to be high value, and with that, I'm going to hand over to you, Damien. Thank you.
Thanks, Dee. Thanks very much, and thanks to Quiva for all the organising in the background as well, and to the Chamber in general for the opportunity to talk to you today. I hope you are all staying well at this time, whilst we all seek to respond to this global health pandemic, both personally and in our businesses. My name is Damien Geraghty, for those who don't know me. I head up the AIB Business Banking team in Clare and Limerick, with a team of about 15 business advisors throughout both counties and the city. Prior to that, I headed up the bank's restructuring team in Kerry, and prior to that, I worked as a commercial lending manager in Dublin. So I've seen all sides to lending to businesses in Ireland, both in good and difficult environments. However, I don't need to tell anyone that this crisis is different to anything that we have seen before. The impact has been sudden, sharp, and for many, seismic. Any glance at any economic data coming out will tell us that. In boxing parlance, we have been hit with an unexpected uppercut and have found ourselves on the floor, and we need to figure out how to get ourselves back up to our feet. Faced with that, everyone, the government, the banks, and businesses in general have had to make decisions in order to navigate our way through the crisis. We have seen unparalleled government intervention, and it is hoped that we can all recover from it. We also know that in our businesses, our number one priority is to keep both our employees and our customers safe at this time, as we seek to support the delivery of essential needs to them. In AIB, over 7,000 staff out of roughly 10,000 are working remotely, including myself and many of my team. We have full systems access, and that, combined with a small but core level of staff in branch locations, together with the branch staff themselves, allows us to continue to provide a full service to all of our customers. We recognise that after health and safety and well-being, the flow of cash flow and finance and the survival of businesses is an essential national priority. This is the focus of our webinar. Over the course of the next 20 or 30 minutes, I will take you through the specific COVID supports available from AIB and also some of the key government supports available. I want to also mention that several of the other banks are providing similar supports to those I will talk you through, with some differences. So if you are banking elsewhere, most of the information I will cover should be useful to you as well. I will also cover cash flow management and suggest some key areas to focus on in the short term to help conserve the cash flow of your business. This is the most important aspect of your business right now, keeping your cash flow working for you as much as you can, even if revenue isn't flowing into your business. I can tell you that the most requested business support we have been asked for to date is for payment breaks. Many of you have already organised payment breaks for your business. Many more may be in the process right now are considering this as a cash flow conservation option. The highest demand is from sectors including hospitality, tourism and leisure, and manufacturing, but there are businesses seeking payment breaks across all other sectors. Delving into one sector that we all touch on in our daily lives a little further, retail. The experiences to date have been diverse, but largely can be broken down on the essential service, non-essential services line. March figures are available, and it is important to remember that the country didn't fully close down until the 24th of March. So some interesting stats from the CSO on those. The department store sales at that point were down 30% year on year versus March 2019. So very much a non-essential stores there. Clothing and footwear were down 52%. Furniture and lighting down 19%. And books and stationery were down 29%. But some subsectors were actually seeking increases. Hardware was up 11%, no doubt, as people got in supplies for doing the DIY jobs that they could do at home while they worked at home and also had opportunity to do it. But just a word of caution, I note that I understand that gardening-related accidents into A&E hospitals has increased by over 300%. So just be careful with the DIY. Electrical goods were up 16%. Online sales were holding up, but interestingly, our credit and debit card data for March would suggest that they were actually below 2019 figures, possibly as the public were being conservative underspending in these uncertain times. Even those sectors that have stayed fully open and continue to trade are experiencing different cash flow issues. Take a grocery store. Turnover may, if anything, have actually increased, but the breakdown of that turnover has changed significantly. Impulse purchases have reduced as customers either do their shopping with the sole aim of getting in and out of the shop as quickly as possible, or not actually going into the shop at all, where they do the online orders, and that has increased considerably. This combined with increased costs, supply chain, social distancing, etc. And the result is that for many, while turnover is up, margins are down. It is a similar story for pharmacies, with many no longer actively marketing their luxury products in order to avoid attracting too many into their premises. However, sales of other items have seen a significant increase. For example, men's grooming products like hair clippers, with the barbers being closed. I, for one, am glad that this webinar wasn't 2 weeks ago, has given my hair a bit of time to grow back from the sudden and sharp shock that it received when I did it myself. I will now discuss the various options that are available to you, but before I do so, I'd like you to share if you've had to consider cash flow measures in your own business. So Caoimhe, if you could just share the poll there, just on whether people have had to consider cash flow options themselves, and if you might then move on to slide 2, Caoimhe, as well. Thanks very much. So on AIB, the short-term COVID-19 support that we have, the various options. So Caoimhe, if you could move to slide 2. Sorry, thanks. Okay, so up to 6 months payment break in terms of support from AIB. If your cash flow is dropped temporarily as a result of COVID-19 and you believe you will be unable to make your loan repayments, you can request a payment break for a period of up to 6 months. It has been extended. A 3-month extension has been added to the payment break for personal and business customers who have been impacted by the COVID-19 pandemic, allowing for a payment break of up to 6 months in total. If you're on a payment break at the moment, you do not need to do anything further for now. AIB will be contacting you over the coming weeks and months about extending this option again. This extension arrangement will also be available to customers who have not yet applied for a payment break. A payment break means that you won't pay any interest or capital on your loan during the period of the break. At present, when the payment break expires, your monthly repayments over the term of your loan will be increased to ensure your loan will be repaid within its original term. There is now, however, also an option to do a term exception that should see the level of repayment stay the same, and this is something that you should talk to your bank about. In order to avail of the payment break option on existing loan facilities, you could call the dedicated phone line 0818 300 113 or use the callback option at aib.ie/COVID-19. We know that there have been long delays in accessing the phone lines and are working through all your business requests at the moment, and we will get to every customer as part of our response. For those who are considering applying for such a break but haven't yet applied, it is important to point out that as it stands, you will need to apply by the end of June, so just bear that in mind. Working capital options. AIB's working capital solutions include overdraft, business credit lines, and prompt pay. You can apply for these by sending an email to your relationship manager, or you can call directly and apply. Some of the questions you may be asked when you do call: what has been the impact on sales turnover compared to normal trading last year, or what are your projections? Can you provide a cash flow analysis of the current position of your business, identifying the additional cash flow requirements over the next 3 months? Your annual accounts are a requirement along with tax confirmation. and an up-to-date statement of affairs. It is worth noting that your current bank will have a lot of this information already, especially if you've been in touch with them over the last 12 to 18 months. It can all be accepted via email, or if you're speaking to someone in their direct banking, they can accept this information over the phone. The overdraft and business credit line options are very much about assessing what you need to fund current and future cash flow, with a view that you can see them washing out within the next 12 months. They are designed to be short-term in nature. The prompt pay and insurance premium finance products are standard products within AIB every year for paying one-off items, for example, tax or insurance premiums, and then spreading that payment out over 11 months. This could be a very useful tool this year for some businesses, in that prior to the crisis, many businesses may have felt that they had sufficient cash reserves to pay these items from cash flow, but are now feeling that it would have been beneficial to have that cash to fund working capital. Many don't realise that they still have the option, as we can back finance those items, allowing the business to spread the repayments out over the 11 months, up to 11 months, and therefore release much needed cash back into the business. There are also term debt options. Obviously, term debt primarily relates to capital expenditure, and this will continue to be something that the bank will look to support customers with. There are customers who are in need and have investment opportunities as is. But in terms of managing cash flows through the current environment, previous capital expenditure funded from cash flow is something that can be used now. Similar to what I just mentioned in terms of businesses that funded tax or insurance premiums from cash flow, some businesses will have funded capital expenditure projects from cash flow over the last 1 or 2 years. Again, it might have made sense to some businesses at the time to fund from cash reserves, but with cash possibly deteriorating at the moment, this is something that many forget to consider. We recently had a specific example of this here in Limerick, where a retail business needed to free up some cash flow. They had spent over 300,000 over the last 2 to 3 years, mainly from cash reserves. They identified it this year that they could do with some of that cash back. We managed to finance 150,000 of that over 7 years for them. This freed up this vital cash for them. Depending on the nature of your spend and whether security is on offer, terms of longer than 7 years could be available. If this is something that you would like to consider, be sure to contact your bank to discuss. And so, Caoimhe, I just ask you to share the second poll there. Just asking, have you funded any one-off payments or capital expenditure from cash flow over the last 2 years that you could consider refinancing? Okay, thanks, Caoimhe. AIB, and moving on to business account fees and the deferral of quarterly maintenance and transition fees. AIB can now facilitate the deferral of the quarterly maintenance and transition fees which were charged to your business accounts on the 30th of March. This means that if your business cash flow is negatively impacted, you can apply to us to reverse the quarterly fees charged to your business account, and instead spread those fees out over the 3 equal quarters payable in September, October, and November. If your business would like to apply for reimbursement of these fees, you can avail of that option. You can avail of that option on our website or through your usual AIB contacts. Treasury solutions. If you're trading overseas, you can avail of a full range of products, including letters of credit and guarantees, which can help manage the risks associated with overseas trading. Managing currency exposure is equally important. This is the key aspect to manage the specific risks you are taking. Of course, managing currency exposure is equally important. A currency move after you strike your sale or purchase price can wipe out the profit margin on your transaction. Better to have that price locked into the quotation where you can, or better still, invoice your natural currency and avoid FX exposure altogether. Or where you should try, and if possible, you try and match your currency inflows and outflows by buying raw materials or goods in sterling and then trying to sell them, having some sales receipts in sterling as well. But this may not always be possible. We have an excellent treasury team, and they are very helpful and very willing to talk to anyone who needs to manage that currency exposures. With regard to merchant services, we are conscious that many businesses have had to temporarily close or make adjustments to provide products and services from a distance. Fee support, AIB Merchant Services seeks to ensure that businesses' payment facilities are not switched off as a result of difficulties with fees that fall due. Alternative payment acceptance solutions to support distance selling are also available, and we can provide contacts with merchant services for that. Moving on then to slide 3, which is the government supports. AIB, so the SME COVID-19 response. AIB partnered with government bodies to bring state supports to our business customers, and it's no different now during the COVID-19 crisis. It's important to note that while these are supports, they are also loans, and therefore they are subject to normal credit assessment in order to ensure that businesses seeking the facilities are sustainable and they have the capacity to repay the loans over a proposed term. The SBCI COVID-19 loan was originally the SBCI Brexit loan, and it's been broadened now to allow applications from businesses impacted by COVID-19. An eligibility code can be sought from the SBCI once the business confirms that its turnover or profitability has or will be negatively impacted by 15% and satisfy one of their innovation criteria. Funding will be available for the extended period to the 31st of March 2021 or until the scheme has been fully subscribed. AIB is accepting applications related to COVID-19 under the scheme. Worth noting, the company must be revenue generating pre-COVID, and the eligibility code is not a guarantee of funding from the bank. A simplified business plan has been introduced for COVID-19 working capital scheme applications. The SBCI Future Growth Scheme has recommenced recently. It had closed, but as of the 15th of May, we are back taking applications for the SBCI Future Growth Scheme. This scheme provides competitively priced, flexible funding for SMEs and agri customers looking to invest in and grow their business. The SBCI Future Growth Loan Scheme will be available on a first come, first served basis until the 13th of June 2022, or earlier if our allocation of the scheme has been fully subscribed. It is an 8 to 10 year facility and can again be unsecured up to 500,000. And as with the SBCI COVID, you will need to seek a code from the SBCI. Other schemes that the government have brought in is the Credit Guarantee Scheme, and they identified 3 barriers to accessing finance through the banks, that being inadequate collateral, novel business market sector or technology, or the need for refinancing from someone who may be exiting as an SME lender. To help SMEs impacted by COVID-19 related issues to have sufficient working capital, the government has repurposed the Credit Guarantee Scheme to provide counter guarantees to the banks and mitigating credit risk or the need for collateral. The Credit Guarantee Scheme can be used by businesses to obtain loans to support changes they need to make to their businesses in response to COVID-19. Key features of the scheme are facilities of between 10,000 and $1 million, terms of up to 7 years, and term loans, demand loans, and performance bonds, and there is an interest-only option available as well. Microfinance Ireland, the COVID-19 business loan from Microfinance Ireland in partnership with local enterprise offices is a government-funded initiative to support small businesses through the current period of uncertainty. It's designed for micro enterprises that are A, having difficulty accessing bank finance, and B, impacted or may be impacted negatively by COVID-19, resulting in a reduction of 15% or more in turnover or profit. The features of it are business loans of up to 50,000 are available for eligible micro enterprises, businesses with less than 10 employees and up to 2 million of turnover that are currently trading. Loans may be used for working capital and required business changes as a result of COVID-19. Loan terms are typically up to 3 years. There's a 6 months interest-free and repayment-free moratorium, with the loan to be then repaid over the remaining 30 months of the 36-month loan period. Discounted rate of 4.5% if it is submitted through the Leo office or referred by your bank. This is available through AIB, and then the rate will be 5.5% if you apply to Microfinance Ireland directly. There's no fees or hidden costs with fixed repayments, no penalty, and there's no penalty for early repayment. Enterprise Ireland is managing a 200 million EU support scheme for businesses to assist during the COVID-19 crisis. These include 180 million Sustainable Enterprise Fund, which is for businesses employing a minimum of 10 employees in specified manufacturing and internationally traded service businesses. It is for amounts between 100,000 to 800,000 per business. What makes this interesting is that EI will provide this funding alongside bank funding and other sources of funding, so it is possible to avail of both here. Specific qualifying terms apply, including the COVID-19 impact. The EI website has sector-specific details to check if it applies to your business sector and the size and other criteria. This funding is designed to enable businesses to trade through COVID-19. Enterprise Ireland has a grant available for businesses seeking financial planning at this time and is available directly through Enterprise Ireland. It is worth noting, though, that all of the above state aid rules apply to them. So just to be aware of that, but it is hoped that in time some of those will be eased and allow for greater access. As Dee mentioned there is a restart grant for small businesses. The Department of Business, Enterprise and Innovation has approved a restart grant for small businesses. There's a direct grant aid between 2,000 and 10,000 based on commercial rate bill for 2019. The scheme applies to small businesses with a turnover of under 5 million and employing 50 people or less. The businesses must have suffered a projected 25% loss in revenue from the 1st of April to the 30th of June, and the closing date for receipt of applications is the 31st of August. There's a lot there, guys. Deciding which option is best for you can be confusing and difficult to work out. And it is important to mention that some of the debt options, increasing your debt, whether through the working capital, term debt, or even through the government's SBCI schemes, may not be an appropriate solution for all businesses. But if you are thinking of doing it, the key factors in deciding what option is best for you is what is the money for and how quickly do you think you'll be in a position to pay it back. If it is pure working capital, then perhaps the overdraft type facility will meet your needs. However, overdrafts, as I mentioned earlier, by their nature, are designed to be short term. If you cannot see the facility washing out within a year, then they are not really a suitable support, and term debt may need to be considered. The SBCI, COVID and Brexit schemes are perhaps more suitable to funding working capital and then spreading it out over 3 years to ease the effects and the cash flow effect of it. Depending on the amount and the nature of the spend, though, it should be noted that 3 years is still a relatively short period of time and could put a strain on the business, and then it would be worth considering longer term solutions, including the SBCI Future Growth Scheme. Again, a case-specific example might be helpful here. We had a hotel in Clare who approached us seeking an additional 100,000 in working capital support in order to try and develop new markets and to adjust the premises with social distancing. Given the sector involved, you wouldn't be surprised to hear that it was unlikely that they're going to clear out that overdraft facility within 1 year, as their summer season is directly going to be impacted. So it was agreed that we would apply for the SBCI COVID facility to try and spread that facility over 3 years. Following further discussions with our credit colleagues, it was decided that the best solution was actually the SBCI Future Growth Scheme, as the purpose of the facility qualified for this scheme also, and the longer term would allow the business to manage its cash flows more effectively. The conversation at all times with the customer was kept happening, so we kept them in the loop and we kept asking questions. It was really around the discussion around their cash flow and their profit and loss projections to ensure that it was sustainable. It is obviously all in our interest that we provide the support, but it needs to be in a way that best suits a particular customer's business and cash flow needs. So in there, we achieved a very good solution by giving the customer a longer term facility to deal with short-term issues that they were having. Quiv, if we could move on to slide 4, please. Okay, so cash flow. We hear a lot of businesses saying that to us at the moment that they don't have any cash flow. So why bother doing a cash flow statement? It is vitally important that a business knows its cash position in order to plan for getting through this difficult period, especially where there's a deficit. Also, this cash flow plan is for you to manage your business. You just share with your partners, such as your banking partner. It's your cash flow and it's vital to your business now more than ever. So start with your business working account. What is currently available to you? What are your immediate cash needs? Is it payroll, PRSI, VAT, suppliers, or debt repayments? Prepare a cash flow statement. You can access an online resource like AIB Small Business Cash Flow Planner on the AIB Business website. During these unprecedented times, it is worth completing your cash flow on a weekly basis and monthly for the next 6 months. Some businesses can even adopt a daily cash flow planner. It is worth modelling some scenarios on your expected turnover. Remember, you're doing this largely for yourselves to make sure you manage this tightly for your business at this time. Look at the government schemes available and utilise these where you can for your business. Look to your fixed and variable costs. What has to be paid? What costs can be cut out to your business at this time? At a high level, as an immediate task, look to your cash flow overall, both inwards and outwards. Look line by line in detail. Ask yourselves where, if anywhere, can you get cash in faster, and what really has to be paid right now, and what costs can be cut out of your business or reduced at this time. Every line should be up for review and renegotiation. For example, look at your debtor book. Can you get payment from your debtors sooner, even if at a discount? It might suit some of them to do this if they still have cash flow or they are resource positive. Then on the fixed and variable costs, how many of those payments falling due can you reasonably defer right now? And give that deferment your focus. That includes obviously the bank loans that we discussed earlier. You may not be able to defer supplier payments. They may need cash flow too to keep themselves in business and you supplied. So work through what you can by agreement and quickly. For example, they may accept reduced and deferred payment levels. You've got to ask yourself the question, do you have sufficient stock or supplies to use, thereby reducing your purchasing spend? Challenge your normal assumed stock levels and purchase decisions. If you have auto renewal orders, consider stopping that for the moment if they're not needed. Can you leverage new government schemes to assist you? You should look at all of these and see if you can avail of any of them where you can. Is there any short-term diversification that can be undertaken to reduce the impact of COVID on your business? For example, we've seen a number of restaurants in Limerick start or maybe increase their takeaway service, and with considerable success. While this may not fully replace existing turnover, it does keep a level of revenue flowing. It keeps the business in the public eye, and in this instance is actually a more profitable element of the business where there are less costs involved in providing takeaway. Could you develop an online presence to your business? The trend was always heading towards online for many businesses, and this crisis will have embedded that further. Again, it may be a means of keeping revenue flowing, keeping the business in the public eye, and it may provide a vital revenue stream long into the future. So it might not even stop after the crisis. These diversifications and other options could be business that you could have long term, not just in the short term. Have you considered the voucher route? The Lean on Me initiative in Limerick has been a fantastic success. There is a willingness from the public to support businesses at this time. When their favourite shop, hairdressers, restaurant has been closed, they haven't been able to support them. This voucher system provides a way for them to do so. Again, it is a means of keeping revenue flowing and keeping the businesses in the public eye. You should utilise your business connections. It's very important to utilise your business connections at this time. Those connections include both your debtors and your creditors in order to potentially renegotiate terms with them. You should keep in contact with your trade associations who will have a broader knowledge and a greater in-depth view of how everything is working out in your sector. Your financial advisor or accountant is a very important resource for your business. Speak to your bank or financial services provider in relation to payment breaks on existing facilities or to discuss working capital for a period of time. Your existing lender is probably your best point of contact as they will have a lot of information on your accounts already. Along with your chamber, the local enterprise office and others will have supports at this time, including a new business continuity voucher up to 2,500 available to businesses to assist in preparing short-term and long-term strategies to respond to the COVID-19 pandemic. Okay, Caoimhe, you can move on to the final slide. And can we see the poll results, Caoimhe? Is that possible? I skipped over them when they flashed on my screen earlier. Are they still there? Okay. So question 1, have you had to consider cash flow measures in business? And not surprising, 80% of you there have had to. The other 20%, well done. And as I said, not all sectors are impacted. So that's probably broadly in line with what we would expect. And the second one, Caoimhe? So have you funded one-off payments or capital expenditure from cash flow over the last 2 years? And again, just over half of you have. And again, that's something that it is a good option, and it's something that not everyone is considering. Is if you use some cash recently, this is a way of maybe getting it back when now you need it. So just again, something to consider when you're looking at your cash flows. Okay, so just in terms of our contact options in AIB, there's a range of contact options available. We would encourage you to contact us via the phone or on the COVID-19 direct contact line or through your business advisor or relationship manager. We experienced an unprecedented volume of calls for the first payment break, and we are very sorry if you experienced delays as a result. We are hopeful that the lessons we learned will make the extension of the break more streamlined. Further information can be found on our business webpage, aib.ie/COVID-19. AIB has hosted a number of sector-specific podcasts over the last number of weeks, which are available to your usual podcast apps on Apple and Android. There are 4 sectors in the series to date, including the hospitality sector, manufacturing and the logistics sector, the retail sector, and also the real estate finance sector. The podcast features businesses in these sectors along with sector specialists and economists from AIB. We have a fantastic internal sector team within AIB that provide us with excellent insights, and this provides us with valuable knowledge, and we're more than happy to share those with you when we're talking to you. In concluding, I would just say that it's very important at this time of the crisis that you keep the lines of communication open with your staff, your suppliers, your customers, and with your bank, with the revenue, and anyone that works with you in delivering in your business. For many, these are very difficult times, but through managing your business through the crisis and availing of the wide variety of supports available, hopefully we'll all come through out of this on the other side. We look forward to continuing to support you in your business through this time. That is our role, to help you. Don't hesitate to contact us if we can help, be that through AIB or through maybe the Limerick Chamber as well. Thanks again to the Chamber for providing the platform today. I hope you found it useful. I think Dee will have some closing commentary. I'm not sure, Caoimhe, how the Q&A, if there's any questions coming in, but maybe Dee, you could close there for us.
Thanks, Damien. Thanks a million. I just really wanted to say, thank you for a solid and comprehensive overview of all that's available. I'd like to reiterate your call for people to speak, to open the lines of communications with their banks and with their lenders, and also to draw again attention to what you mentioned there. The local enterprise office have that business continuity voucher, which is available up to €2,500. I think it's 90%. That can be 90% of the cost of a service, and that allows people to go and get some financial advice from consultants, or to even think about strategy and how you might at this point be reimagining and pivoting your business to reflect the changes that we're all experiencing and our new operating norms. So I just wanted to draw attention to those two items. Also, we have been sharing the AIB podcasts in our e-newsletters through the Chamber. They've been there. I've listened to 2 of them. They've been excellent, and I would urge everybody to please do log on and have a listen to those. There's some great insights there, and I know from previous interactions with AIB that those sectoral teams have incredible data and really, really valuable insights into the different sectors. So I'd encourage you all to avail of that. It's widely available. And just to finish, I'd like to say thank you to Damien again for the prep and the session today, and to my event manager Caoimhe, who stepped in with when we had a little bit of a technical challenge at the start. And so well done to everybody involved, and hope everyone gets a chance to get out now and enjoy the sunshine. Take care.
Thanks, Dee.